We are live. There's no
Just
intro.
go for the yeah, we'll go through. Hey guys, we're gonna go straight to the intro. So Victor's gonna go on brand and he's gonna click the intro button. Is it there?
Let's see.
It's
It is. It is. There you go.
we'll see.
Hi, everyone. This is a beautiful day. Welcome to another session of live trading and market analysis.
Whoop, whoop.
How are you doing today, Alex?
Yeah, I'm doing fine. I'm just gonna pump some music on because we like a little bit of music where we're pumping up the markets. So I'm just gonna put some lo-fi on.
Sure. How is everyone tuning in today? I see we have a couple of viewers. Mauricio Mendoza. We have Andy, Henry, Luis, and so many more. Welcome and thank you for popping in. I'm sure I believe you were able to spot me fumbling with the go live button, which is fun when you do things for the first few times. But that's what happens when you stream live, right? You can redo
You
it.
did a very good job of it.
So, how is everything going, guys? Let us know in the chat. We had some interesting Friday for sure, to say the
Wow.
least, with the price action. Let us know
Yep.
in the chat, how did you fare on that price action? Did you stay outside the market? Were you just an observer of the market, or were you actively being trading it, or were you perhaps with your back against the wall with a position that turned sour on you? Let us know in the chat, because these are the days that survival is tested, right? Because when your strategy is working well, it's easy to be in the market, in and out, getting some profits, maybe a little losses here and there, ending up well. But it is these days when the market throws a curveball at you. It is these days that the survivability of you as a trader is tested, because uh, I mean, that reaction was. Let me see if we have that. If I'm showing that, I will show my screen. I'm talking about, let's see, the NFP. It's the elephant in the room. What we had Friday was huge. I mean, the reaction the market had. Let us know in the chat, if you guys how you traded, how it went. Um, so this is very significant. If you look at this, I can go straight into some analysis, preliminary. I mean, just looking over it, we had, right, just looking at EU, we had last couple of weeks, actually, right? We have, since this swing low, we have had a positive, a bullish market structure all the way until Friday. We did have a little bit of, if you look at the daily, we did have this swing low, but to me, this is not just structural swing, a lower swing. I mean, it is a just ranging in within a bigger. This is the market structure, right? That we have been having, and if you look at this swing low, this one is not a structural. It did not break anything. So all of this was still just a swing low, a retracement, and it is today, or actually yes, today, that we broke that swing low after we made a higher high. We're making a lower low, something that is shifting, that shift in the market, and that's something we did not see up to NFP. NFP, everything was very bullish. To be honest, there was nothing in the air telling us that this was going to be going this way, and that's something that can happen with macroeconomic events. They are unpredictable, right? The market can have some sense at it, what is going to come out. There can have an expectation, but the actual number, the actual result is unpredictable. That is why you need to be, not fully invested, perhaps, or lower your risk, or perhaps even consider skipping altogether the day as NFP, or wait for the news to come out and then to put on your positions, because you never know what the market will do. And days like this can, break your risk system if you don't have
Mm-hmm.
a robust system in place. I mean, this can it can gap down. In this case, it was a gap down, and let's say you, even if you held it and you said, okay, it's gonna pop, it's gonna retrace on Monday, it opened with an opening gap, right? You can't see it in this price feed. If I show the other one, you can see here how price just that's the famous, or the 23. Actually, the gap was a little bit 28, and it only filled a little bit of that gap, 28 pips on the opening gap. That's significant. That's you don't see
Yeah,
that
that wasn't
every
on
day.
NFP though. I think that was due to the Prime Minister of France saying that they're going to do a election next week. So it was out the blue. I think that stirred the markets up a lot. But NFP
Yes,
was
I think you're right. Yep.
NFP was tough, especially for risk on assets like stocks, or your crypto friendly people like me. It really did shake up the crypto markets, and it definitely shook up everybody else, because if the job market is still hot, then maybe they're not going to cut rates. And if they're not going to cut rates, why is anybody going to start putting money on risk on assets at the moment, which is very annoying. For day trading, for us, it's fantastic. There's so much volatility coming in, but on a higher time frame, bullish on risk on assets, it doesn't look too good at the moment. But what do you think, Victor?
Well, yes. Before I answer that question, what I think about what the market condition, the shift signifies for us as trader, I want to mention that yes, the opening gap. I agree with you. I think it is indeed that. I didn't mention. I forgot about it. That new election called by Macron, but what a lot of traders do when they are in losses, they tend to hold their losses, right? They don't want to accept the losses. And if someone if someone had was in a position on NFP and was waiting to get out on a retracement, because
Not
sometimes
happening.
with news it retraces before it continues, right? That it does do that a lot. If someone was holding their losses, waiting for a better moment to close them, and the end of the day came, and they said, you know what, this is going to pop perhaps on Monday, I'm going to hold it through the weekend, and that this gap would be like a second kick while you're on the ground. So
Yeah.
it's that is the importance of picking your battles. If this is completely different than what you expected, it's better to step away, accept the loss, and move on. Better to survive than to fight this, because in the end you can't fight the market. And coming back to your question, what do I think about this price action? To be fair, I was long in a position. So because everything was telling me, the expectation, at least market structure, I don't know of expectation, but the market structure, that is something objective. That's something I can read. The market structure was still positive, was bullish. So I was long. I did close half my positions before the news, because of that reason I don't know about, and the position were a bit bigger than usual. And I, of course, I got stopped out on the remaining position. But the what I want to say is that in on the short term, that wasn't, great for me, because I was expecting, of course, market to continue up. But this
Hmm.
shift gives us much more opportunity in terms of, if I consider, like, the what is happening now, it breaking that swing low, that is now, I can find quasis in this structure, right? So, and that is exciting for me, because this is a possible reversal or change in sentiment, and we might be going much lower in the coming, if I have this, we might be coming back for a retracement, but not necessarily right away, right? And that can happen later on, but I can already see that order block right there where we left NFP as a great place to be, shorting for a lower part. So to me, this is opportunity, and rightfully so. You
Hmm.
said, for traders, for day traders, this is
It's
this is
amazing.
amazing. Yeah, because it is in these situations where, things are, how do you say, unexpected, that
Hmm.
the opportunities are to be found, right? When other people are mispriced, you can get in as they are, reading the market, and get those good trades. Because when everyone is agreeing that the price is going up, usually there's not going to be, a lot of opportunity, a lot of retracements, because everyone is on the same side. But it is when things changes that you have these huge exaggerated moves, which give us that opportunity to, get something at a very good price, or at a retracement when it comes back to that order block, if it does so. So I like this, yes. And yeah, the losses that I took, actually, I took, half my position were already in profit. So net, it wasn't losses, but in of course, I was expecting a lot more profits, and that's why I mentioned losses. But the setup was eventually, in the end, it is a profitable trade, because I took partials. So let's look at the chat. Someone is saying, I desperately need a mentor. Okay, that's that's a bold statement. If you think you need a mentor, well, I'm
Yeah.
not going to recommend
So how
anyone, but
how 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 would how would you look for Victor? If this was you now, what are the things that you would do to look for a mentor? If you had to, because there's so many different mentors, there's so many different styles of trading, there's so many different personalities. What would be your ABC step to finding a mentor that is a good fit for you?
I have never had a mentor to begin with, so I'm
Hmm.
not sure I am the best person to get advice on getting one.
Yeah.
But what I would say, of course, with my time in trading, what I would say is, I would first get to know the people, uh, the community, the way of trading of anyone. If you're going to be following someone specific, get to know that person and the concepts, before you, do anything with anyone, because it's quite difficult to get good mentors. Just if you don't have the experience, if you don't have feedback from other people, I don't mean reading reviews on, online, but I mean people you actually know, so that the feedbacks are authentic. I would say, I would follow them on YouTube if they have a channel, and I will try to approach them without, buying, or without making a commitment yet, and get to know their system, if that is possible, how they trade. Of course, you're not going to be getting all the details of how they mentor you, but get to know what concept they use, before you step in, if that is possible. The other way is to be instead of looking for a mentor, is to look for a community, because it's in a community you can get a lot of value, that might perhaps not replace a mentor completely, but be exactly what you looking for in a mentor. Only it will not be one person, just the whole community. I know it sounds like a plot, but we at the 5ers, at our Discord, we have such a community. And I don't mean you have to come to us necessarily, but look for a community like the one that I know best, which is our community, where people genuinely want to help each other. And they're traders just like will be traded just like yourself, just with perhaps more experience, or they may have different experience that you don't have, and you may take advantage from that. I would say look for that community first, and perhaps get some pointers who might be a good mentor. Because I think it's very difficult for someone coming into the industry new, to be able to find, spot, identify, and choose a good mentor. It's not that easy, I think.
Yeah, I think it depends what position you're in. Are you now in a position where you don't want to put any money towards any kind of mentorship, or you don't want to do anything? Then I would go straight to YouTube and check out all the free content. There's people that go live like us, that do live executions pretty much in day out, and you can kind of dissect roughly what they are doing just by looking at what they are doing. You've got many different live trading rooms, so you can get a good understanding of the different ways. I'll give you a good example. Don Vo has got an excellent, super excellent stream. I think his name's Don Vo or Vo Don or something like that. He trades gold a lot of the time. I don't see him actually executing many times, but he has a lot of information on there, and he's a gold trader. So maybe you want to look at that. And I think he scalps. He only takes really quick positions, but he's got one. There's a million different other ones, but that's the one that I know off the top of my head because I always like watching his intro. He's got a really cool intro. But gathering this information, just looking at people's YouTube, sticking it all on a chart and just seeing how they get in, look at the patterns of why they may get in, and that's it. If you've got a little bit of money, have a look and see if you can find a community. And if you can find a community, then you can ask people and just follow what people are doing on there. But at the end of the day, you should take a little bit from everyone and not just look at somebody and be like, this person now, give me two. This person is, the be all and end all, and what he says is, God's word. And you just got to be careful with stuff like that, because he may have a different personality, he may have a different way of doing things, and you just need to find your own way as well. All of that, you can just bring it into something.
Yeah, well, what I can while you were saying that, what I can add to is, I think the best mentors are the ones that focus on the process and not on any specific strategy or rules. Of course, they will teach you their process through their strategy, but the focus should not be on the strategy, because strategies, you may not be able to execute it may not be suitable for you, but if you have a mentor or someone helping you that helps you with the process to build you, to form you as a trader, right? How you do your system building, how you do your risk management, even if you're not going to do the same thing as he or she. If the mentorship is focused on the process, I think that's where the value is, because in the end you will not be trading like anyone else. You will have to find your own voice, your own pathway in trading, and so it's best to focus on the process. Like how do you find your edge? How do you do back testing? How do you do analysis? How do you find your which settings are the best or optimal for your your approach to the market? That's one thing I can say. But of course, you will not only be able to see that when you have some experience with the with that person who you're eyeing to be as a mentor.
We've got someone in the background and he's looking very, very, very fashionable. We're going to bring him through. Where is he?
Where am I?
Oh, yeah, where are you? Hey, do you want to put the layout with the 3 people on? No. Yep. The one with, no, that's me. No,
Oh, look
not
at this,
there.
guys.
Woo!
No,
Nice.
it's reversed though, isn't it? It's like
No,
Very
mirrored,
nice.
isn't it?
it says the
No,
5ers
it's
on there.
fine. It's
Really?
fine.
It's not because it's mirrored on my screen.
No,
Yeah,
it's
it's not- yeah, it's fine.
perfectly
It is.
readable.
Yeah, I
And
know,
it
but
looks
I'm
good.
talking about like, is it
Ooh, we
mirrored?
just got a TP, baby. We got that
It's not
TP.
mirrored. All right, awesome.
Do you want to whack on the
Right,
screen?
so I got
Then
about 30 minutes. So, but this looks good, man. This looks good.
It
Yeah.
does. Yeah, I agree. I think
Yeah,
I will
so
be,
guys,
I'll be
I'm-
going
black
online as
hoodies
well.
for traders that only trade over 6 figures though.
yeah, exactly. No, so I'm testing it out. I just got it delivered. So I got this one, and I got a white T-shirt with the logo. So I'm testing it out. I'm gonna test out the quality, and if the quality is good, guys, we're thinking about getting you guys access to these hoodies and stuff like this as well. So that's what we're doing. We're testing it out, and
Yeah, baby.
actually, I probably came on like always. Just comes on and just interrupts you guys on whatever you're talking about. But Victor,
Yes.
I think we should talk about. You remember this weekend? Was it this weekend? Maybe last week. We talked about the comparison of these strategies, right? You remember that?
Yes,
think,
of course.
I thought were we talking about that's the thing that we wanted to hold back before for an actual episode, though, Vic? Is that the thing that we were talking about?
I can
No.
touch base on it lightly, but without going into details. You mean Jonathan? You mean how you try to find the optimal setting for a specific strategy?
Yeah, exactly. So I want to because I want to talk about the
Reset the screens.
I'm sorry for just coming on here and just absolutely hijacking the stream here for you guys, but I got about maybe 20 minutes or so, and I felt I really wanted to show some stuff here that I've picked up basically. So let me see if I can bring it up here, share the screen, see if I can
we
find everything.
We need to reset all of these different layouts because the layouts that I've got are all really bad.
Yeah, they're pretty bad.
I'm
not responsible for that though.
I don't have the three
Maybe
screen layouts.
I think they're all like personal layouts then, because I've just done these. But Jonathan's got a layout that just looks really good. Do you want to put the layout?
Which one is it?
Then no,
The 3 one?
yeah, the one. There you go.
Right. So guys,
Yeah,
you
I
see,
like that
this
too.
is Edgewonk right here, and so this is an account where I've been testing the set and forget approach. You remember from this April, April and May, I've tested the set and forget approach. Now, the result of the set and forget approach has not been very good. It's not been profitable. It was looking very good up until this point right here. So you had a decent, like we started at a minus, but then you had a decent equity curve, and then boom, a massive drawdown. And I believe this drawdown is like 8R loss or something like that. So it's a drawdown that shouldn't be possible based on my risk to reward. Like having an 8R losing streak for me means that's just completely disastrous for me. So what I did was I said, okay, so set and forget is not working, but what I'm interested in is what the entry and the stop loss might be working good. All right, but because I see that most of the trades, they don't hit that TP. They come back to entry where they hit the stop loss, but they do run into profit, right? That's the important thing. The entry is working, the stop loss placement is working, and price is running into profit. But I wanted to see how far into profit is the trade actually running. So with Edgewonk, I was able to test 2 different alternative strategies. One, which is the taking full profit at half an hour, so actually minus risk to reward. So what happens if I take full profit at half an hour, and what happens if I exit fully at 1 hour? And I put this all in here. And then what I did was something cool with ChatGPT. I gave ChatGPT ChatGPT I gave the AI all the statistics of the different strategies, and I asked it to print me a chart, and I'm going to show you that now. Let's bring up, and this is very, very interesting. Just letting you guys know here. This is how you know, like Victor said when we talked about this. A lot of people they're focused on finding the perfect system, finding the perfect entry trigger like ICT or order blocks or blah blah blah, whatever. They want to find that perfect entry and exit strategy. But what I've seen is all you really need is you need to figure out, you need to add your trades into a journal, okay? Add your trades into a journal, then gather statistics, and then you'll find your edge within these statistics, okay? Let me show you what I mean by that. I copy this one. I'm going to bring it up on screen here. I'm going to show the comparison of these three strategies. So this is putting all the information that I have from my trading journal of these three different tests into ChatGPT. So you can see that strategy 0.5 is exiting fully at half an hour. Strategy 1 is exiting fully at 1 hour. And then you have the set and forget. The red line, whatever that color is, I am probably slightly colorblind, but I think that is reddish. That is the set and forget approach. And then you have this one right here, which is the yellow line. Yellow. That is the exiting at half an hour. And then you have the orange line, this one at the top, that is exiting fully at 1 hour. So what's interesting here is you can see that there's a massive, massive difference. The set and forget approach was kind of profitable up until this point right here. But then you had that massive losing streak. And that's the thing with the set and forget approach is because you just set the orders and let the trades run, you are, it's going to be, you'll have losing streak and you have no control over those losing streaks. So you might have things like this. But looking at the exiting at half an hour, it has a 72% win rate. So guys, actually taking less profits resulted in more money. So I want you to think about that. The set and forget approach was based on trading from one level and then looking for a couple of big winners, 5R, 6R. That was not profitable. But by taking profits at half an hour, basically a minus risk to reward ratio, I made more money and the win rate is 72%. Very, very good. But what's interesting is if I let the trades run just a little bit more, on strategy 1, I exit fully at TP1 with a win rate of, let's say, 62%. It has a 10% lower win rate, but the risk-adjusted returns is more than double, and the profits from that one is more than double. And you can look at the equity curve here. It's absolutely beautiful, almost at 45 degrees angle. So the reason why I wanted to show you guys this is I haven't, I didn't really find this by doing TA, by adding indicators on the chart. I found this by digging into my statistics of the journal. And now I know that the best way for me to trade this strategy is to just exit fully at 1 hour. And I also know that I can take trades below 1 hour and still be much more profitable than set and forget. Right. Yeah. So that's what I wanted to share.
Yeah, the takeaway is that if you go on YouTube, what people who are talking about trading and actually traders as well, we tend to look for the strategy to be the source of the edge or the alpha. And of course, you do have to have ways to identify the entries, and you have to have a adequate place to put your stop loss, but and NTP and so on. But there is a lot of edge to be found tweaking and analyzing and your statistic, and that's exactly what you're showing there, Jonatan. I think that's something that is doesn't get enough credits or enough attention, in my opinion, and it's something we should all be able to do, and we should do with some regularity, with some frequency, because you already should have those data. That's one thing. And two is, the statistics brings objectivity in your expectations, because you measure, you know which one is better. It's not you assume, you look at the past
Mhm.
results, and you can say, okay, 1R, I can say with certain degree of certainty, 1R TP is better than 0.5 RTP. And unless you have the data, you're assuming one or the other. But by having the data, you can be confident that you're doing the right things, to get that profit yet you're looking for. So yeah, I think this is an ability, or a practice, that everyone as traders should be doing, checking if our TP settings is optimal.
Yeah, and
So
you don't have to have an advanced journal to do this. I'm gonna see if I have a question here. So he's saying risking the same as your stop loss is okay. Yeah. So what I have here is, so Rob, I'm assuming this question is for me. So what I did here is all of these lines here, all these trend lines or whatever, is these results is the same entry, the same stop loss, the exact same trades. Okay, so I've gone through the journal, I've looked at all the trades. So they're the exact same trades. The only difference here is a difference in take profit. So if you look at the set and forget, it had started with a drawdown, but it had a nice push to the upside. I remember this. This is I believe a 3 or 4 hour trade right here. And then you had like a 3-4 hour trade again, and then it went down, went up. So on average, the winners in the beginning was quite good. Now, like Misha is saying, the sample size, very, very important question. So what is the sample size of this one? It's not big. It's only 39 trades, but it's over the course of a 2-month period where I've decided to test this strategy. So I wanted to test it in forward trading, in live trading, and I wanted to look at the results. Now, when you have results like this, you don't need a massive sample size. When you see that, it's so very obvious that the difference in profit is huge. Then the set and forget is just, I'm just gonna throw that out the window. It's not working. It's just not working.
yeah,
But going, yeah.
No, what I was gonna say, the sample size, the needed sample size, the number of trades you need depend on how big the difference is that you're trying to measure. If the difference is very big, if the equity curve of both strategies, they are crossing each other all the time, then you need a lot of data to identify which one is actually better. But if you have if there is the results are significantly different from one to the other, you should be able to see that trend already starting when they start diverting, right? They start moving away from each other in terms of the graph on the equity curve. And that's what you see with yours. The yellow one, the half an hour TP, is moving away, and consistently so, from the 1R, the orange line. Although I have to say that 40 is not a lot, but you can already see the tendency to have which one seems to be better. So in order, that already could be enough for you to stop exploring 0.5 R TP and start focusing on 1R. Of course, while doing that, you will need to continue registering more trades so that you can have bigger sample size and to draw those conclusions with a higher degree of certainty. But you don't need to have 300, right, to already know which one is better, especially
and
especially in comparison with the set and forget. That's even more remarkable. The difference is very easily seen.
Yeah, exactly. And what I'm saying is, looking at this here, there is some potential in both of strategy 1 and the 0.5. Both of these has potential, and I don't know if the next 100 trades, it might be the case that taking profits at half an hour is actually more profitable. We don't really know about that. But what we do know is the set and forget approach has a max drawdown of over 8. And looking at the risk adjusted returns, that is just not profitable. Having a max drawdown of 8 would mean that I would have to risk very small amount per trade, so it would just not be very profitable. So looking at this result here, I could stop trading the set and forget, but I'm still going to continue gathering statistics on both of these strategies. So in the next 50 trades, we might see that exiting in half an hour has gone above strategy 1. We don't really know that, but there might be a possibility, or they're going to follow each other. And then at the end, I'll see that strategy 0.5 is actually not that much less profitable, but it has a 72% win rate. What I would go with 72% win rate, because having that high of a win rate is obviously quite nice. To be trading with a 72% win rate means it's a huge difference in your psychology to have a win rate of so let's say you have a win rate of 40%, and then you compare that to 70%. Like, the difference in trading psychology is insanely big. Yeah, so those that's a very good question. Are these results a representation of your trading strategy? Not, well, the set and forget approach from April to May, this is a test that I've done. So this is a test on this account. But I guess the question is about if strategy 1 and strategy 0.5, if that is representative of how I would trade it. And it's obviously not going to look like this in live trading. And that's also another reason to continue testing this, because it's one thing going through the trades and looking at trading view and price history, and then just setting, okay, I'm going to exit here, compared to actually doing it live. Because we got slippage, we got spreads, we got news information. There might be days when I'm not trading, and those days might be the winning days. So there's a lot of things that can affect this. So we need to do more testing to see how this actually turns out. But I'm very eager to start testing this live, and then start sharing the results.
I feel like you're testing for the both of us as well.
Yeah.
You do the hard work. You just tell me which is the best R&R to go after.
It is a lot of work. It is a lot of work. It really is.
And perhaps that's why a lot of people don't do it, because it's not, at first glance, it's not fun. It's fun when you think about it, because this is so valuable and will make you profitable, and that makes it fun. But I mean, the actual thing, sitting there not looking at real market but just looking at statistics, is not as fun as looking at price, NFP coming out.
I like it though, because I feel like I feel like I'm sort of like a investigator. I'm in the journal. I'm looking for something that makes everything better. And I look at the statistics, I look at past trades, and I try to find patterns. I do feel like it's a lot of work, but it's fun work actually. I do feel like when you find something and you're like, oh, wait a minute, the stochastics are like, I remember, looking at the stochastic RSI, and I remember saying like, wait, like there doesn't have to be a bull cross. We don't need a bear cross or a bull cross. It's I thought I needed that, but the statistics say otherwise. I actually don't need that. I just need stochastics to be above or below a certain number. And then you look at that and you say, well, now we can remove that part. We can move on to the next indicator. What does this mean, and what does that do? And it's really cool way of
what you're describing. There's what you're actually doing is you're validating the indicators. What you're describing, you're actually not, because when you don't have the data backing everything up, right? You may have some data, but you don't have data on the specific indicator in your strategy. We what you're actually then doing is we assume that it's helping us. But when you actually have the data that confirms or dispels, the prognostic value of that indicator, then you can take it away, and you're actually validating or invalidating things and make your system simpler. I think that's the way to build your system, and that's why I said about the mentor. The best ones are the ones that will teach you how to do this, because these are the skills you need to be able to extract from your strategy, extract the most you can get, choosing the stop loss TP profile that avoids drawdown and optimizes for profits. There's no, by looking at the charts, you're not going to be finding that. You're going to find that by looking in your results, in your journal, in your statistics. So it's validating it is very, I think, very important, fundamental, and we should be doing that with everything we do. Everything in medicine, we talk about evidence-based medicine, right? And in trading, we should be doing that too. Evidence-based trading, evidence being data-based trading. And that's what you should be. We should be doing, because there's nothing better than having the data to validate and basing all our actions. Of course, we can't do that with everything, but we should be able to do that with as much as possible. Every little question: should I be taking partials or not? Consult your data. Should I be closing before big news event? Consult your data.
Consult your data. Do another one.
Whether you
should we be trading NFP?
Consult your data.
Yeah. Should I be buying Bitcoin? Yes.
Consult. Oh, damn! You got me with that.
Guys, I actually had to run. I just wanted to get on and show you this stats. Before I go, I want to say something. Henry had a beautiful comment saying, Alex, you still have to test it. Like you can't just rely on my data. You have to gather your own stats.
Please, sir, could you just trade my account?
Yeah. Should I buy Pepe? No, we cannot recommend anyone.
Well.
Nah.
Obviously, we've got on the bottom. We do have a disclaimer saying, risk disclosure. This is only educational, but
buy Pepe.
It's
if your
you can get in on a good level. If you can get in a good level, then definitely. But at the moment, I think it's better holding off on doing anything until we see even a little bit more information what's going on with inflation and see what the US are going to do about their rates, because at the moment, with a hot job market and the US probably not going to, cut their rates this year, that doesn't mean I don't think we're going to see crypto going up for another leg until that happens. That's what I think. But
yeah, Wednesday's going to be very interesting.
Be a big
very
day.
Interesting indeed. Yeah. I'm thinking Wednesday we're going to do some scalping as well. Alex, you're going to be here on Wednesday?
Yes. No, I'm not going to be here on Wednesday.
Okay. Well. Me and Victor, we're gonna do some scalping.
For sure. Interest rate on Wednesday. I mean, that's gonna move the market for sure.
Is it interest rate or is it inflation results? Which is it?
Inflation
both
data.
Of them. No, both. Oh,
of them. Okay. They got
inflation rate. Yeah. Okay. Inflation rate.
Year on year.
Okay, guys. I gotta run.
Okay.
See you later, mate.
See you guys tomorrow. Take care.
No problem. Thank you. We have CPI on Wednesday, which but we also have the federal funds rate on a couple of hours later that day. So that's the interest rate from the Feds, and I mean, these are the news that doesn't always, but can move the market a lot, like we saw on Friday. NFP, it was not the expected because ADP was lower than expected. And then NFP was way more than expected. So that unexpected change in the numbers is what made the market crazy.
Think people actually were thinking that jobs would be higher than last month. I think people kind of priced in that, it's slowly trickling down, and that's why, the Fed might be looking to cut rates, because the job market's slowing down. And if job market's slowing down, economy's slowing down. So they need to boost that back up, which is normal process, but it wasn't the case. And I got caught out. Some of the positions that I put on spot the last couple of weeks, I was buying loads of spot positions, and those are like 20% down now. And that was, I got to see what's going to happen with those. But I did get long on gold. Obviously, we just got long on euro for a quick scalp, which I'm glad we got out where we got out, because you do see that off that EMA and off that this kind of area, a nice little reaction. Same thing with gold. I think we've had a massive push down. As you can see, we're starting to find a little bit of a base. Obviously, we're still, now we're under an EMA. I wouldn't be surprised if we keep breaking down. But after such a hit down, I wouldn't be surprised that traders are unrolling some of their positions. They're taking profits. It's normal to have a little bit of a breather after such a big hit down. So then obviously we've seen like a little bit of a base here, where we've seen like consolidation, breakout, consolidation, a retest, and then a continuation upwards. I'm not looking to hold this for very long. I got into it a little bit late. I could have been a little bit more patient and get into a better position, which would be down here, where you've got obviously an imbalance and you've also got a 50 fib. But I do think we're going to have a little bit more of a push up just to around about this area, which is a 200 EMA on the 15-minute, which just shows just a little bit more of a balancing in price before we see any other moves. That's what I think. And that's the position that I've traded. I've got just a bit over, just like about 6%, no, 0.6% risk on this. So I'm not pulling the full 1%, just because I've already taken a trade and I don't want to give back more than I've just won. And that is it. That's what I'm in at the moment. So we're just going to have a look and see what happens with this. It's pulled nice structure. So you had this consolidation, push, holding on the EMAs, break, retest, break, another retest, which some people could look as a little bit of a flag. So just loads of orders getting filled in these areas before we push off. That is what I think.
Sure.
What are you looking
maybe
at?
Maybe I can show my screen to. Let me get my screen online so I can show what I mean. Oh, I already had it. I already had it, but that's fine. All right, so that is the this is EU. What I like to do and what I always do is top down. So I start on the higher time frames, the weekly in this case, because the monthly isn't telling us. Well, it is telling us indication, and that's information. But this is not what I want to show. What I want to show is this. We have. If you look at the market structure, we already have. Remember, this is the weekly, right? So these moves are something to be taken into account for the lower time frames as well. You have a left shoulder, a head, and break of that structure. You have a right shoulder, and you have a second right shoulder, right? This is things that I describe. It's not. I don't know if other people consider it a second right shoulder, but that's what I call them. Second right shoulder here, and if you see, this is already the reversal pattern, right? That's the quasi that I always trade. And by breaking and reaching this level here, in principle, the reversal pattern on the weekly has finished. But since it made a lower low, right, and is going up, as long as it doesn't take this high, this structural high, you can have another leg, because that is what the market a lot of times keeps doing, right? I don't mean to say that this is going to happen because I don't know what's going to happen, but this is something. If the market is going to roll over and start going downwards, this is a quite possible, course of action for price. So when price was coming back into this area, we didn't have we didn't have a from this point we didn't have a weekly, but we did have this weekly order block from that it left behind halfway through. And I was looking into this for those who are in the workshops we give on Discord. We were looking at this area for a reversal, and price wasn't giving that indications on the daily, on the 4 hourly at all, because market structure kept on being bullish. But what do you have in just one day, just with NFP, it formed that rejection that we were looking for, right? So now we have a bearish order block on the weekly telling us that this order block, right, the shift seem, or at least the weekly is telling us it by rejecting this area, right? Let me point it out. This is the area, that's the order block. And now with this bearish engulfing, it confirmed that it wants to shift, or it wants to reverse, right? Doesn't mean it's going to reverse and go all the way straight down, but that is tape reading. That is the market telling us its intention. It is doing it at a relevant area, and this is the supply area. So that, and it's giving us that sign that the sellers are coming into the market at that area where they should be coming if the market was going to reverse from this order block. So when this changes the market structure for all the time frames, not the market structure, but the sentiment and the expectation for the coming sessions, days, and so on, because now we have a weekly order block, fresh one. So I don't mean to say that price will come back to it right away, because that is beyond our, there's no way to know if that will happen. But if it does it, let me get this out, clean this up. When we have this, I don't mean to say that price will necessarily come back to this weekly order block right away. We don't know that. But if and when it does come back, that is the place where I want to be taking that weekly trade to the downside, because the market structure with the weekly quasi, and the reversal or the rejection that came into this order block tells me, in any case, that the market wants to go much lower in this time frame. So if and when price comes back, that's where I want to be looking for a short on the higher time frames. Well, with that in mind, we can go to the lower time frames, the daily. So, and you can see also, let me see if I can get that. We did have, price hasn't reached an order block, an entry order block on the daily, but you can see, as I mentioned before, that it already is starting to give that breaking, because on the daily, this would be the neckline, right? We have the head, the left shoulder, and that's the break of the neckline. So this is very interesting. It's telling us on the weekly, and it's also visible on the daily. Let me put it in, and I'll mark it down. Right, so this is market bullish in a bullish market structure, and then shifts. That's the head, and then now shifts, breaks the structure, and at some point maybe we'll come back to retest some order block in this leg, and that's, to me, that's the area, the sweet spot to be, catching that move down to whatever relevant structure below us there may be. So it's to me, it's very, very exciting in the coming days, perhaps. On the H4, we're still on that. Who knows? Maybe continuation on the H4, continuing breaking more structures to the downside because it doesn't look at all that it's going to reverse right now. If anything, price has come from a daily. Look on we have this is the order block that was left by the by the NFP results from Friday. That big red candle is that NFP. That's Friday. Left a fresh order block. That's this one, and leaving one order block, a bearish structure. It tends usually it goes to a daily of the same time frames to the daily on the opposite direction. So this is the bullish one. Didn't seem to be the one reversing price, and it's right now it's the second one, which doesn't surprise us because that NFP move was quite strong, quite explosive. So that it doesn't respect the first structure, makes sense, makes a lot of sense. And now we'll have to see if this second structure is going to hold or not, and if it does not hold on the daily, we don't have anything else except for something that is already mitigated below us, which is this. I have no idea if this is going to, be the actual order block that's going to stop price or not. There's no way for us to know that, right? But we will have to look for what will price do within this order block. Will it form and reverse come back? And if it does, then this is the area, one of the areas you could be looking for a short, right? For that quasi, as I mentioned. I think that these are if you can catch, for those who follow me or attend to the workshop in Discord or have seen me on YouTube, I trade, intraday. But this is the opportunity that I'm looking for all the time, where on the daily and the weekly, I have a setup in the back of my mind, and I try to get my intraday entry with that in mind. And if possible, I will try to, leave something open for that daily setup, which I always talk about. If you are able to catch something like this, assuming it comes back at some point, and you are able to catch an intraday trade from this area, and you target, whatever structure that hasn't been mitigated yet, right? That would be the FTA, and and that's how you catch those big trades. And this is also already with a stop loss of 23, but as you know, I go for a lot less than that, and as you already can see, the risk reward becomes much higher. But so that's something that I'm looking for. So I'm not eager to go short, because after this move it may continue, but it may also start, and we are in demand area, so you don't want to be selling a demand area just like that, because there is a chance it may just bounce from here. Even if it's a pop, that could be enough to take you out. So yeah, that's and if we look at the lower time frames, we see that, let's see, we have the market structure, market conditions are very bearish, are not looking at all that they want to be. There are bearish structures being formed. This is on the H2, but it's very bearish still. Bearish structures are being formed and being respected. So the market is not ready yet for a reversal, as you can see, making lower highs and lower lows. And this can continue breaking all the structures below us, because remember, on the weekly, it formed a bearish order block. So I was saying on the daily, I was looking at the daily before, but on the weekly, we don't have anything below us except the monthly order block that was formed, right? So, and we'll have to see, that's a huge area. So we doesn't tell us much information for as an intraday trader. But okay, so let's look at the chat, see how you guys are doing.
Put GME on GameStop. Just look at this. It is honestly crazy. Honestly.
What asset is that?
GME, GameStop.
Okay. Is it what's the, I don't
Yeah,
trade,
go on. You're on
GME.
futures at the moment. Yeah, you're on
Oh,
futures.
that's
Go on
right.
to all.
Okay.
Yeah, go on to, yeah, there you go.
Okay.
Just add it to the chart. Let's have a look.
Yeah, let me take off a few here.
You can just put it onto the chart directly. You don't have to add it to your watch list if you don't want it.
Okay. Since I have my assets.
Yeah, you don't want to mix everything up. Just GME there is the GameStop there. Yeah.
How do you
You just click on
how do
it.
you put
Just
it on?
do put GME. Just click on the ticker. There you go.
There you go.
That is
Bi-
insane. That is absolutely insane. Like,
What is this? This is
this is the whole Roaring Kitty, whole stock manipulation plays that people are screaming about. But that is absolutely crazy. What was the high? 64. So apparently the guy had what, like $1 billion in unrealized profit at 64, and then obviously it's just probably evaporated by now.
how do you know he held those positions? Did he?
Well, he was on a live stream with about over 500,000 people watching him, and he had the positions open apparently. So,
Wow.
crazy.
And this happened live. So he is he still
No,
holding, or is he?
I don't know. I'm not too big in the stock world, but this is a
I
big thing
see.
that's been going on in on Twitter, and everybody, is very interested in
Wow.
what's going on in GME, because it's a company that is doing really, really poor, and the amount of people that are shorting it, all of these big moves are a lot of short squeezes and things like that. So
that's what I want
haven't
to
you
say.
seen you haven't seen the movie on GameStop, Victor? It's
I
called
haven't.
Dumb Money. Watch it.
No,
It's
I
called
haven't.
Dumb Money. It's I
Okay.
think a movie that's just come out recently, but
Okay.
it talks about it's a movie around GameStop basically.
I see. I think I've heard something about it, but I haven't seen the movie, to be honest. Yeah, but this is clearly. I was gonna say, to me, there's clearly a short squeeze. If you look at price, how it was behaving, the ranges it was having before, and the ranges of the moves, this is clearly something that looks like a short squeeze, right? Liquidation, short sell is being liquidated as price was being pushed up, and he was holding long, you said, and lost a lot perhaps if he didn't close. So that's brutal. But did you say a billion open unrealized
Yeah,
profit?
he had something like apparently he had something like a billion in unrealized profits, but that's
Wow.
probably evaporated now.
Wow,
That's
that
crazy.
puts him.
Go on to
well,
the live stream on YouTube. If you could go on like after the live, go into on his live stream. I think he had like running 250 million
Wow,
unrealized losses actually, but that's crazy.
that is crazy. That's insane. I mean, I think if I'm correct, the trader that George Soros, who has the title of the man who broke the Bank of England, if I'm not mistaken, the trade
Yeah.
he did this was on a 20 billion trade of pound trade, I think, and his profit was, I think, 5 billion. If I'm not, but the trade was 20 billion. If I'm not mistaken, I may have the numbers incorrectly, but if my memory serves me well, but he's very. I mean, he's already. If he had 1 billion in open profit, that there's not many people who can say this. They at some point, even if they didn't realize it, they at some point have that kind of open profit.
Yeah,
Wow.
but there you go. That Andrew said something. Who's going to pay him? He's got to close all of his positions. Who's gonna be able to cover all of that if he wanted to sell it? I don't understand as much about stocks, but is there enough liquidity in GameStop
it's
for all of that?
that's what I was going to say. If there's no one, the market will pay him. He just have to find buyers. So we'll have to. It can offload that whole position in one click, of course.
No, of course
Obviously, see, but he will have to. If from my understanding, he will have to sell little by little as the market has buyers coming in, as there is liquidity, so you don't tip off influence the market, and you will have to do it, spread it out in time. You can't do it in perhaps in one day and I don't know, many days to unwind that position, but he doesn't have to be. It doesn't have to be paid. You just sell his position at the current price. Just he needs to do it within the ranges of the possibilities of the liquidity. And I have no idea what the liquidity looks like on GameStop, so I
GameStop.
can't say anything.
That's what I have to say. A lot of people say obviously CFDs are super risky. They are super risky, but you're in and out. You got the liquidity there in a button. It's not really liquidity. It's just,
Yes.
you CFD contract, you just close it.
Yes.
You don't have that issue. But when you're trading, futures, or you're trading, futures are quite liquid as well. But if you're trading crypto futures, and as my experience with coins that haven't got enough liquidity, price would be passing your limit order, and you may not be getting filled. It takes you a while to get out. So imagine just a stock that hasn't got enough liquidity to get you out of your position. You want to get out, but you can't. But
yeah, that's definitely a advantage above individual stocks, because of course you have the bigger names that have a lot of liquidity, and liquidity will not be an issue. But that's not the case with every individual stock, and you don't have that issue with Forex as much. So liquidity is something, I think. I'm not a stock trader, so I should be exercise caution with this statement. But I think with Forex, you will have less an issue in for liquidity than you will have with stock market. If market is moving very quickly, because the Forex market is simply bigger in terms of volume. So
Hello, guys.
ooh.
And I can't stay away from you guys for very long. So yeah, I'm back. I am back. What are we talking about?
Roaring Kitty and
GameStop.
GameStop.
Oh wow, yeah, that is a situation. That's weird. Everything's just weird. The fact that he's able to move the market like that, that's insane.
Oh, he did?
People just trying to because this is the second time they've had these massive short squeeze, Victor. This is the second time it's happening. So people knew how much people made on this particular play, and they're expecting it again. And he just came on and basically pumped up, for round two, baby. You're going for round two.
Yeah, even I was interested in getting myself some. There's a GME, right?
Yeah.
GameStop. Yeah, because I'm like, well, why not? It's and when someone like me, I'm not trading stocks. I'm not invested in that at all. And I thought me thinking along those lines, that's a top signal. So I feel like we've I kind of feel like we've seen the top of that rally, right? Don't you think?
Well, who knows what can happen?
I abstain for having an opinion here, because I think as I'm not a stock trader, I don't think I should be trying to think I know how it goes there. I like to stick to what I know.
I think that I think it's a top. I think it's a top. I feel like just like what Alex said, is people saw what happened last time, and they looked to get in on the next move, and kind of like as soon as he appeared, it's like the whole market just went crazy. It's like he posted something on Twitter, like that person leaning forward in its chair, and then everything is exploded because everyone knew what happened last time, right? That was it's pretty crazy. Have you guys talked about have you guys looked at EU after NFP?
Yeah, I got into a small position for a scalp. Got out on actually a really nice area. But there's not really much to talk about. At the end of the day, it's still going down. We'll see if this is a base. I don't think this is a base, though. I think, we have got this big demand area, in all fairness. So let's get rid of all of this. We've got this demand area here that we've obviously hit. So we'll be expecting to see what we're seeing now as a little bit of resistance. We could have a nice push up. Obviously, the candles, they're not really getting smaller. Obviously, you had these big volume candles here, big volume candles. You've had a gap. You've got another quite a big volume candle. This is smaller, in all fairness. So that was 16 pips. That was 26 pips. So they are getting smaller. So now we're coming to an area where I think we could be looking for short-term intraday long opportunities. So we've already taken one. Prices come down. I still think we're going here. We may have a long right here right now. I've got a position open already, so I don't think I want to get into another one. But if you see here, we've already had a push up. We've come back, hit the 50 in the demand area. And I wouldn't be surprised if we continue up just to take the next area of supply, which is up here, which coincides with a 15 EMA. These are day trades, though. Don't forget, you've got a lot of selling pressure, a lot of people that are scared at the moment. Not scared, but every people that are just watching what's going to happen with the news in France and interest rates and stuff. So obviously, I wouldn't be holding on big positions for a long time unless you have a longer time frame outlook, basically.
That's I'm just about to take a long on EU as well. I think we should see a small move to the upside. I mean,
long on gold, because I do think gold has got something very similar happening.
Yeah, the same can be said about GU, by the way. I will put my screen on to share, without going into much detail, what I mentioned about the weekly for EU also holds true for GU, sorry, from EU also is true for GU. As you can see, the weekly has formed a bearish order block, so that's a good sign for us on the higher time frames. But on the lower time frames, what do we see? We see that the daily has the same as EU has formed and left a bearish daily order block, and the neckline is below us. So if it hasn't formed that quasi yet completely. For it to form it, it would have to take out that neckline before coming up. That's one thing. So it's not ready yet for the daily to be a quasi setup. And on the 4 hour, you do have the quasi, which the neckline comes in here. I will mark it here. This is the neckline. As this is, let me mark it with the H4. This is the neckline. There we go. You can't see it very well because of the other lines I have on, but that's the blue one. And so basically what you have is this. You have an uptrend, right? Market was going down. This is on the 5 minute. It makes a higher high, higher than this one, and then breaks that structural low. And now this is the H4 that was left behind, and I need to take out this because it has been invalidated already, and it left a very nice outside bar formed order block for us to short if and when it comes back at a later time. So, but I still don't see the if you look at the daily. By the way, this is one to say something. So what we see here, or at least what my reading is, we were in a bullish structure that is, with this NFP price action, is breaking structure and possibly forming reversal patterns that may indicate that it might be going lower in the coming sessions, days, and perhaps even weeks. But we don't know that yet. But that seems to be the case. And on the long side, what we have is, we don't forget, we have a bullish order block that was formed by this outside bar, right? That's the outside bar, and that order block is, since its creation, it's been 1, 2, 3, 4, so very fresh, and it's been retesting on the 4th candle. So that's a good for a continuation from this order block going up again, right? So that's something that I'm looking for on the long side for GU. If you go to the lower time frames, this is the order block, right? To look for that long. I am aware that the NFP may keep on breaking structure, so you got to be aware and cautious. The H4 does not tell us that it's ready to shift yet. This is bearish order block, right? And there's nothing bullish on the H4 in this leg, right? In here, it should be start forming on the H4 bullish structures. It's not doing that. And if it's not doing that, the likelihood of it bouncing and going this way is not very high. So we should be looking for that structure to show us that price action to show us on the H4 as well. In my opinion, that's what I'm waiting for. But I'm also looking for at least a pop perhaps to that area if it forms a reversal pattern on the H4, which it hasn't happened yet. It hasn't formed yet. The only thing we've got so far is on the H2. We have an order block, but that's it. That's flimsy for that move much higher. But yeah, I'm looking for that long as well on GU if it really shows us that reversal pattern on the correct time frame. So that's what we have.
Silver looks long. For anybody that just asked, silver looks like a really nice macro long, to be fair. I'll go through it after Jonatan goes through his trade.
So I'm currently long on EU here. As you can see, it's just a quick quick scalp. Well, I guess you can't really call it a scalp. It's a so let day me trade. So this is day trade, I guess. So this is on the on MetaTrader here, and I'll show you on TradingView what my reasoning are, or my reasoning behind this. So this is the trade, right? And I'm just looking for this move to just come up. And so usually what I see when we hit a high time frame support is we see price starts, ranging, starts ranging on the lower time frames. And that's what I'm hoping to see here. We had the first initial move. You can look at the 50-minute. On the 50-minute, it is a really good looking downtrend. But I think, looking at this is the first sign of a higher low. So you can see how we had a big dump. We have a low, a high area, lower high, lower low, lower high, lower high, lower low. This is the first higher low in this sequence of lower lows and lower highs. So we are seeing a sign of a potential breakout structure. Now, this is just a move where I'm thinking that we might come up and test these range highs right here, and we might move like this. Now, we might come up like that, or we're just going to come lower. But the thing is, this is high time frame support. If we zoom out, we can look at the 4-hour. This is the actually on the daily. You see that what happened during NFP was we came up, we started hitting this resistance right here, and we really we had it. We tried reclaiming that level as support right here with the break and retest, and we actually went long on that retest because it looked like a pretty good opportunity to go long. But now obviously we can see that this level acted as resistance, and we're now back at support. So this is a fairly high high time frame support level. So to me, I want to look for longs, and I'm looking for signs of price kind of reacting to this level as support. Now going down, we see the price has a strong move to the downside, but every move to the downside becomes smaller and smaller, and price is kind of like pausing. Every move lower gets a little bit weaker, and now we're getting the very first sign of a potential range forming or a potential breakup structure. Now, if you're looking for a more of a swing long or something like that, I would be looking at something like this for breakup structure. This to me would be a really good trade for potentially taking this up to the NFP dump, and that's the very small move that I'm looking to take right now, because obviously you don't know if you're going to get that move to the upside, but I do think it looks fairly likely that we'll get a small push to the upside. So I'll be out for a quick 0.5 or 0.6 R trade on that. But who knows? Anything can happen here. But I do think if we do start ranging around here at this level, I do think that the next move is probably going to be on to the upside, because we are at support. And I'm not going to short this unless we break structure and continue to the downside, because there are some pretty good levels below. We have a very solid level for potential move all the way down here. So that's what I'm watching. And then if we do go long, looking at the daily, that would be a really good take profit as well for that break of structure trade. Yeah, that's what I'm watching.
Nice.
Very nice. Very nice.
Yeah, I'm looking for. Yeah, go ahead.
Can you make a withdrawal when you have trades open?
Nope. No, you can't make a withdrawal when you got trades open, only when trades are closed. But as soon as you make the withdrawal, you can continue to trade on your account. Let me just jump over to silver, because I don't know why everybody's trading silver. I don't know why. We haven't heard many people saying silver until recently, but anyway, it's probably because it's got really lovely price action on the daily and stuff. You've had obviously this massive accumulation. You've had a breakout of that accumulation. You've had a lovely test of the level as well, which you can say it was here. So you had a nice test of this level, and then you've had a push up. So break, retest, and we're looking for the continuation. Obviously, you've got these equal highs, so you've got a lot of liquidity up there. You've probably got a lot of liquidity also up here, or anybody that is short from these equal highs. Maybe they're in swing shorts. Maybe they would move their stops to that high after NFP. I don't know. At the moment, all I can see is a break and a retest from another level that looks like it's going to continue higher. Obviously, this is the daily, so this can take a while to, maybe you'll have some consolidation here. I don't know, but this looks really nice just to continue up as well. You've hit the 50 fib, which is also around about on a level here as well. If we go down to the 4 hour, let's have a look at the 4 hour. You've got this area of demand, which it's holding in. You had a brief break underneath, found a lot more demands, come back in. It's super clean price action. It's just gone like that. Now we're going to have maybe a retest of this area. It's not going to, if it doesn't break down, then you'll be looking to take it up, and then it's obviously that the opposite to what you're seeing here. You're seeing up, down, 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 up, down, down. You're going to say the opposite right now, just to fill out all of these areas. Oh my god, I sound like I'm trading ICT when I'm not. But all of these imbalances of price, all of this stuff, and then maybe to take out these highs. That's what I'm looking at on silver. Super nice chart actually. And then gold obviously is just playing around in a range at the moment, so it's not doing anything.
Do I have trading view up? Can you see? Well, let's see. Where do I have my screens? Yes. Okay. So I do have trading view here. So I want to show you something. We can look at this is the 1 minute on EU. So we got, let's move out to the 5 minutes. So this is also, a big reason of taking this trade. I've talked about this a lot. When you get a higher low, when that higher low is inside this reload zone area, it kind of, to me, that is a good sign. And on the 5 minute, you do have that move to the upside. Price comes down and it forms a beautiful 5 minute bullish engulfing candle. And now what's happening is you're coming down and you're retesting the 0.618. Now, what I'd like to do in this case is I'd like to add a fib of this move as well. So you find that fib confidence. That's probably going to be, you're going to see that it's The retest of the 0.618 of this bigger move is also the 0.618 of that smaller move. So you have a really good fib confluence right here. Now, if I would be trading this strictly from, if I would only be trading this strictly from the reload zone setup, I would be going long if there's a bounce here, and the setup would look something like this. And that's also why this trade would be invalidated if price moves below here. So if price comes down here, that's where I'm going to close the trade. So you can see from this example, the entry was a bit early, but I entered it based on, let's see, what's the replay function, based on the close of that candle. So you can see how the trade, looks interesting here as an entry, but then of course when you look at current price action, it kind of looks like it's ready to get invalidated. But as long as we hold these lows right here, I'm hoping we can get a move to the upside.
Check Gala for me. Now I'm in a spot position of Gala at the moment. That I got into Gala on consolidation on a weekly time frame. It was on a spot position. The only thing is now, if we have a look, and you guys can tell me what you guys think, if on a weekly, go on a weekly chart, because I got into it on a weekly. Now, what are your thoughts on that? Because I got in just at the top of that candle that broke structure. No. This is a recent add-in into. So on the consolidate, there you go.
Here.
Yeah. Now I am looking, even though it looks good, but it also looks quite bad when I put it on my screen, because I got the EMAs and I got a lot of things on there as well, and it does look like it's gonna break down more. But it's like selling a position on supports. You don't really want to be doing that. But then again, with everything going on, it's quite a big position.
I think
so. I am thinking about it.
Yeah. So the the fact that you're thinking about it, and the fact that you're thinking about selling at support, obviously means that the position is too big. When looking at this, like, we should always at least be able to hold it, below this major support. If you look at the weekly and get in on the weekly, I mean, we're talking about 20% move to the downside. And anything,
and it's already a 20%. It's already a 20% move to the downside.
Yeah, so that's good. That's
you gotta love it. Just close the trade, Henry.
Yeah, I mean, in a situation like that, I would just say, you probably wish
if you have a look at something like FTM or Solana, which are other quite big positions that I've got on spot, I'm super happy I'm still happy to hold that. And it actually looks like a worse chart when I look at it on your chart. But I'm happier to hold on to those.
Yeah.
Coming back to Gala, your entry was on that last swing high, or
no? So I got actually faked into the trade because I thought it was breaking, because you can see it had that kind of descending kind of triangle, or it had like a little bit of a triangle, just a lot of consolidation there if you have a look on the daily.
Yes.
So I saw that it was breaking out of that consolidation. I got caught in like the typical pattern trade where you think it's breaking out of a certain pattern, you jump in off on the daily. Obviously looking at the weekly as holding support, got in as on a daily, and then when the day actually eventually closed, then it turned into a wick. But I was holding it through the last couple of weeks because it's still holding support. But it looks like it's breaking structure really right now.
To me, it's
not
accelerating to the downside.
It's accelerating to the downside. It's not actually breaking structure though. if you have a look on a weekly, it's not really breaking structure until it breaks that low. Realistically,
No, I mean there's nothing wrong about. I think it looks good. The only reason is, the only thing that I don't like is just these wicks here that's above the support. But I do feel like maybe this is the range, and you come down and it's like you're gonna get that fake out, but then it's just a move down into the support anyway. So it's it's an interesting situation to be in.
Yeah.
Speaking of interesting
what I see
situations,
is we're coming out. Actually, the close of the weekly is an outside bar. It's a bearish outside bar.
I'm gonna pull over to your screen.
Yeah, no problem. So to me, that's a very uncomfortable position to be in, because a bullish,
Thanks,
a bearish outside bar.
Feeling pretty uncomfortable.
Yeah, that's what I mean. Because this can have a wick easily, even if it doesn't close below it. It can have a wick because of that outside bar. It shouldn't be. Let me put it this way: if we consider this to be I don't see in my on the weekly, there's no order block here. So in my concept, there is no like order block for support. But of course, I see that break, that resistance turn into support, which is that break and retest that you're trying to catch. But if it is going to bounce from this area, then it shouldn't be forming bearish order blocks. Let me get that. Of course, this is on the weekly, so by the time it forms it, you should be already in it on the lower time frames. But on the weekly, in any case, it's not. It's forming a bearish order block and another one on top of or back to back with an outside bar. So it's screaming. To me, it's screaming bearish structures, and if that is the case, then why is it doing it on top of a support? Doesn't rhyme. Doesn't rhyme, because it shouldn't be giving me.
It's a nasty place to be, because it's like,
yes.
On one hand, it's at a macro support level, and on the second hand, it's not the support. It's holding, but it's also not. You're not seeing buyers come into the market to push it higher. And now we've obviously had the news with NFP and things like that. It's a difficult play right now. But I'm already 20% under. Do I really want to then go another 20% just to find out if I'm invalidated? It's a tough one, to be honest.
Yeah. That's going to be a big loss. If you wait till you're down 40% to find out if it's worth exiting, maybe you're down 50% when you actually exit, and then it reverses. Because it's really in that area where it can reverse. So my advice to you is
hodl.
As these, you've just become a community member. You're now a Gala community member.
On the daily as well, right? On the daily as well, it's only showing us appetite to continue going down. There's nothing bullish about it. So it's very painful to be in this position, because you want it to be showing some reason, but it's not.
Okay, I got stopped out on the EUs, and I'm thinking, where's the next trade? Is what I was asking. Yeah. Wow, no, so EU broke down, and if we break below the local lows here on the lower time frames, I think we're going lower. It's not looking pretty, not looking good at all.
Yeah, it's the H1 was the only order block that was actually there was one before, but it was broken with no problem. You can also see there was a structure on there wasn't on the H2, that was on GU, but EU doesn't have any leg to stand on other than this H1 order block, which is not a lot if you think about it. You have everything still bullish. It is at a daily demand area. But I mean, if it doesn't turn around, it can just continue to go. There's no way. It does not necessarily need to reverse there, because there's a demand area. So
how many orders have picked up their orders as well after all of that NFP stuff and all of the news coming out? you may have people that have had lots of big orders around those areas, and now they've probably just taken them off soon as they do. They want to see what's going to happen with the euro dollar. They want to see what's going to happen with the euro, with everything going on with the elections, everything. So
Yeah.
You
see
know,
some real
I
violent moves.
There's another cue or another sign or hint that the market gives us. It is how it reacts, how the market reacts to those order blocks, right? Because that's what I look at all the time. And we have on the daily, we have this order block, right? I mentioned it. It did not stop price, but look what happens when price breaks it, right? Price breaks it. With that big candle, does not form any, and this is on the hourly, does not form any bullish structures, breaks or gets below this daily order block, and place it interacts with it from below. But look at this now. It goes lower, makes a lower low, and look at that reaction to the pip almost that it has with the order block, with that daily order block. Look at that. This is indicative to me of this is a support area on the daily. It's a support that turned into a resistance. That's not looking good. So to me, that tells me that it could continue to go even lower than current prices, but it is at its almost at its ATR already at 100% ATR. It's about 90% ATR. So the move to the downside will probably be slower today in any case. But we'll see. We'll see if this H1 can turn things around and start a new influx of buyers. But so far it's not looking enticing for the buyers.
Well, I
do you
just
guys
added
want to
to
see
the gold position.
Gold.
Now it's come back into this area here. So it's come back into the fibs. It's hit, you had like the top of the range here. You see this candle as well before. You had the bearish candle before we had a really big shoot up of demand. So that is why I got into this position. This first position here was a little bit of an impulsive position. It was my first one. Ideally, it would have been better to wait here, but I didn't put the full risk on. Now I am full risked at just over 1%. I'm about one and a half. No, one. Let's have a look. Should be about 1% in total. But that's why I got into that. So 400 plus 700. So yeah, so I'm just at 1% risk, which I feel like this is a nice position to be in. I don't think this is a bad position.
I've just bought a I actually bought gold as well, but wow.
Yeah.
Wow.
Wow, geez.
Okay.
God, how big's your position? Moving the markets with them CFDs.
Yeah.
As soon as you say you're getting in, poof, big God candle.
Yeah, no, I probably got a very bad price on that one. And what's this? The all the comments about market manipulation? Like, I don't know, guys. We've been trading these markets for quite a few years. Like, this is nothing new. I don't really like. I don't even understand where the ideas of market manipulation is coming from. This is just, prices go up, then prices go down. Sometimes they range. It's just, they can go up 5%, can go down 5%. It can range for a month. Like, as soon as prices go down, it's market manipulation. No one screams market manipulation when we're all making money and prices goes up and we're risk on. It's just
that's not true though. Everybody's saying price manipulation now on GME, which is price manipulation. It's going up. Well,
that is price manipulation though. But we're talking about EU. I feel like
EU?
Yeah, we're talking about like the general market. I mean, that's different though. I mean, yeah.
It's kind of hard to manipulate a $1 trillion asset. Wow, dollar asset.
Yeah, I mean, we have
in liquidity every day.
we have seen in the past. There are stories with manipulation in the forex market. There's some interesting stories. You could Google that. London market manipulation. That's some interesting stories right there. But that's if you look into it, it's that doesn't really happen every day. It's not something that happens every day. Who knows? Maybe it is. I don't know.
That's an ICT student. Ah, that's why. Got you.
Okay, so gold looked very, very good. And
It
now
manipulated us. It manipulated us to get
exactly manipulated us to the downside. That
It
with
got
a
us.
bearish
We're
bearish
now
manipulation candle.
We are liquidity. Oh my god. Get out now. Get out right now.
Yeah, I you know what? I market entered gold because I saw that it was just in such a good area, and literally as soon as I pressed market buy, it just shoots straight up. So I got a terrible price. That is just such.
That is just
That
Murphy's law, isn't it? It's just
yeah. I pressed market buy, then I switched over to trading me. I'm like, wait a minute, that's not what I bought. So let's see. We'll have to see quite a good move to the upside for me to be able to exit this at a break even, because I don't want to be holding this with such a bad entry.
Oh, did you put big boy size?
Nah, not really, but too big.
But medium boy size.
Yeah, medium.
Yeah. I'm kind of learning my lesson from putting big boy size on positions. It's never.
What are you
goes well.
putting on now?
Now is a safe 1%, but there has been times where I've jumped into too much volume.
Okay.
You got to know when to be aggressive.
That's the thing. That's the thing about that's the thing about discretionary. How do you know?
How do you know exactly?
How do you know?
Gut feeling, unfortunately, but that could just be the pizza
Coffee
from last night. Yeah.
But I'm feeling bullish on this now, nah, man. That's just the coffee, dude.
That's my blood pressure.
Yeah.
I'm trying. Go ahead.
Yeah, like when it comes to risk, I feel like being discretionary with risk is not a good idea. That is not a good idea, because you're being discretionary with risk, and it's like, yeah, it's. I feel like being discretionary with risk is a losing battle.
You think a mechanical risk is better?
Yeah, just consistent risk, every trade, because like discretionary, like you can take a trade, from a discretionary point of view, but when it comes to risk, that's your statistics, that's just the law of big numbers,
Mm-hmm.
So you can't really say like, oh, this trade has a higher chance of winning. Well, you don't really know that. It's a 50-50. Every single trade has just a random outcome, but then you look at 10 trades or 100 trades, you see a pattern. So it's actually quite difficult to put it to words, but risk has to be, in my opinion, there has to be a system with risk, but you don't have to trade systematic, but risk has to be systematic.
I agree completely. In terms of handling risk, you don't want to be varying and if you do it, it is based on the drawdown, the available drawdown. Other than that, unless you have data on you varying it, you probably are not doing a better job than just leaving it fixed. And by fixed, I mean fractional fixed, a same percentage of your available drawdown, because you're only complicating things. You need to do a lot of decisions as a trader. What is the bias, up or down? And you might have conflicting signals. Is this a good trade, good setup? And if you're going to have also the risk management as a variable in your workflow, you're only making, including or creating more variables for your outcome, and you don't want that. If you want consistent results, you want to have things as consistent as possible. The process consistent, the setups you take are consistently the same, and the risk you take are consistently the same. And if you incorporate more variables, you're gonna get more variability in your results. That's not what we want. So I agree completely. You should not be tinkering too much with your risk management, unless you have data on it and you know what you're doing.
You literally, like, it looks like you bought my stop loss there, Victor.
Did I?
It kind of looks like
Actually,
it.
yeah, this is I'm trying to not trying. I am this is a little I'm trying out a little scalping approach. As you guys know, my trades are selective, and I need to wait for that H4 to show me that the market is ready to turn around and form those reversal patterns. And in between, I was thinking, okay, how can I still have a lot of time, which usually I spend on other things trading related, but it does give me that opportunity to put on more trades. And they need to be in such a way that they don't take my attention away from my actual signal that I'm waiting. So I started trying some scalping, and I still this is just experimental for me. So this is discretionary. It's not based on any fixed rule, and I will be I'm just collecting data as to. Of course, I do have some what I want. I want to be buying demand and selling support on different time frames, and using EMAs as a dynamic support, or maybe an indication of what price wants to do. But basically, I'm just using all the signals that all the tape reading that I can to know what is the next little pop in the market. And I've been trying this for a couple of days now, and I've been getting good results, but it's too soon to say anything. So but I'm going to be showing the trades. It's a negative risk reward, of course. So I'll see. Let's
Gold
see.
looks like it is coming here, coming. No. Sorry for the stop loss. We should get.
Yeah, I'm gonna.
We should get
yeah,
one
I'm
of the.
gonna-
We should get a a shark, or something to come onto the
Jaws.
Jaws or something. Just to come on, like, instead of we got. Who we don't use DJ Khaled anymore, so we might as well just get like a shark just to come across the screen. No.
Yeah.
Stop loss.
Yeah, that was good.
Maybe super. Alex? How's the gold trading? Exactly when gold is about to go to the stop.
Yeah,
going well,
yeah, I like that. It's like I want to show you guys something very cool. Okay, let me. Where's the replay function? Right there. Okay, check this out. So you're gonna see very shortly. You'll see the 20 and the 50 EMA pop up, and you also see that blue line right there. That's the weekly open. Now, this is such a good example of a good break and retest trade right here. So you can see the weekly open right here, confluent with these highs. So you have obviously the Monday candle is opening here and it's breaking out. Then today we came down, we hit that weekly open area, the 20 EMA right here.
Nice.
Now, perfect. Got that wick down to the weekly open, got the 20 EMA right here, and we add the fibs. I believe we could add it from that one. And right below the weekly open, you also have the 0.618. And we almost hit the 0.618 right here. So when I see something like this, so the 1 hour trend here, this is on AD density. So the 1 hour trend here just looks absolutely, fantastic. Just it looks very, very good. So if I see something like this, you have a bullish candle here on the 1 hour, and a great thing I'd like to do is we now know that the local highs right here is that's going to be the FTA area. So that's going to be the TP. We're not really sure where we want to enter, but we know we want to exit here based on the 1 hour. So we go down to the 15-minute and perhaps even the 5-minute. We can see a beautiful double bottom here on the 5-minute. And actually, I think the risk to reward could actually be quite good, is trading it like this with below here, because now, you know, we had the hit of the EMA and the weekly open and everything, and we have a double bottom confirming here, and I think this and then you'll see the price continues higher, and the low of this move was the actual low. I mean, what I'm saying is the hit of the 0.618 and the weekly open and the 20 EMA was the actual low, right? So you're looking at the 1 hour, you're seeing a very good trend, and then you're getting confirmation on the 5-minute, the 50-minute, or even the 5-minute. And then on the 15-minute, there's also a nice bullish, like a bullish engulfing bullish candle right here. So yeah, there's a lot of opportunities trading. It's a very simple way of trading, and just going with the break and retest. And when you get that confluence with the 20 EMA and the weekly open, it's actually quite good. If you guys want to get the weekly open on, you can go into TradingView and you can look for key levels. If you put in key levels, you'll find an indicator called Key Levels by Spaceman BTC. If you add that, you can go in
I
here.
wonder why he likes the trade.
Yeah. You can go in here and you can see that there's a lot of different levels. For example, you have the Monday low, the yearly open, the weekly open, daily open, Monday mid, previous week mid, Monday high, a yearly high, yearly, like everything like that. And these levels, I found that the weekly open and the monthly open are two levels that are very, very interesting to trade off when you're swing trading. It's very cool. Oh, we're actually doing a giveaway today. I thought we were not going to do a giveaway today.
Yeah, because we didn't. I didn't tell Toma, so we'll tell everybody. Today is the last giveaway ever. No, it's going to be the last giveaway until we reach 40k subscribers, and we're going to save all of those accounts that we would normally give in the giveaways, in the daily giveaways. We're going to save them for a bigger live stream with loads of giveaways and loads of activities once we hit 40k subscribers. So that is the plan. So we've got the giveaway for today, but tomorrow and until we hit 40k, we're not going to be doing one, and I'll be tracking how many days that takes and how many giveaways we'll be doing. But anyway, that is I think the code.
Yeah, and I think that's the code. I'm gonna be adding the link as well. And I think it's important to note here, guys, that we're doing these giveaways. I know you guys like the giveaway, but what we're really trying to do here is to, we want to make sure that people who are coming in here are actually watching the live stream and getting information and usable knowledge from the live stream. So our main purpose of these live streams are not the giveaway. And I'm saying this because we might be shifting focus a bit going forward, where we're putting much less focus on the giveaway and much more focus on the actual educational content. So I want you, yeah, I got the giveaway. I'll post it right away. I got it. So that is the giveaway link. I'll post it in the.
Should I get an escort? Depends. Quite an interesting question we've added.
Yeah, you don't have to read every question.
No, I read everything out loud. I look at it and it's like.
Yeah. Okay. So the editor is watching this. You don't do not make it short of this.
No,
but it it can be a security escort. It can
Yeah.
be,
Yeah.
some bodyguards.
That's what I was thinking about.
Yeah, of
That's what I'm
course.
Obviously,
talking about. Wait, hold on
yeah.
a second. You guys were talking about something different.
Victor, what are you talking about? You dirty, dirty
Yeah,
old man. All right, let's focus on the giveaway. The code is MEH for life.
For life.
All right.
Yes,
so
he
you
was
do
talking about a
that.
security giveaway. A security
Oh,
escort. That's it.
security giveaway. We're not going to give away securities.
Yeah, this is, when we get 100,000 subscribers, we're gonna give each and every one a security escort.
Mm-hmm.
Just because, gotta watch it out there on those streets.
Yes, we
Wow.
we like to take care of our
traders.
our traders. Yep.
Yeah, I feel like the quality of the live stream just went from very, very good to questionable. Yeah, Ford Escort. That's a good one. Good car. Okay, so yeah, guys, try it out. Try it out. The key levels indicator right here. I've tried this out quite a lot, and two of the most interesting levels, in my opinion, is the weekly and monthly open for swing trading, and with intraday trading, the daily open is very interesting. I'm sure a lot of you already know about this, but adding the daily open, and it's quite simple. You can go here in the indicator and you can check for the dailies. Right here, see the daily open, and then what you want to do is just uncheck everything else, and then you'll see when I have all of this unchecked, you'll see that the only level that comes up is the daily opens. Then when you go into the lower time frames, like the 1 minute, you should be able to see how price is reacting to the daily open. And in this case, the weekly open is the daily open. Well, the daily open is that level. Look at that reaction right there. You get that hit right there, and it's just, imagine just getting in on the daily open. You would have gotten a fantastic price right there. So daily open when scalping or intraday trading, and then the weekly and monthly open when swing trading is two levels that are usually acting as very good horizontal support and resistance levels. And as with all horizontal levels, the first retest is usually one of the most important retests. You'll see here that you had the obviously the daily candle opening right here, and then you're seeing quite some nice reactions around the daily open. I mean, if you look at the 1 minute, all of these are quite good reactions, and there's not really any horizontal levels here, just the daily open. Ryan is asking if gold is good for a swing. At this point, I feel like
I don't know about a swing.
I
don't know about a swing. I think you've got a lot of resistance and a lot of news coming out that is everybody's going to be watching Wednesday. Now, if you are a gambling man, you can put on an educated bet on what's going to happen with the interest rate, with the inflation rates and all of that stuff. Probably not the best idea after we saw the reaction we had on Friday.
Yeah, I mean,
yeah,
I'm not taking any kind of long-term trades until we hear what's going to happen on Wednesday, in my opinion.
Yeah, your job as a trader is to take trades where the probabilities are in your favor and are a little bit known to some extent. And the news is not known. There's no way we can know what the news will do to the market. So it's better not to, if you're in the market, not to have a big position on. And so swing, I wouldn't say swing. The water is too murky to be a swinger right now.
That.
I would like to have some clarity in the market on PA and those big risks, right? High impact news getting out of the way before I put on, and I can sleep well at night, because your sleep quality is important, even for your other trades. You need to be well rested, and if you can't, if you have a position that is if you're taking too big of a risk, then you're probably not going to be comfortable, and it's not a good place to be trading from.
That could be a fundamental play though, because I think if I'm not mistaken, somebody in the chat can just the inflation in Japan has actually gone up a little bit, I think. So if it's going up, obviously they've got to do something with their maybe interest rates to target that. I'm not too sure. The best person to get on here to speak about fundamentals is probably Jordan from Traderlicious.
Yeah.
Or we'll find somebody else that loves talking about fundamentals. But the basics of just, I think when you've been trading for quite a while, you pick up roughly what the main news and the sentiment happens. But Jordan we were talking about different kinds of levels of fundamental plays. Like, let's say you have China going into Taiwan. Well, some people Taiwan. So the first play people may be looking at, okay, if China goes in, and then maybe the chip manufacturers, all of the big chip manufacturers may be having problems, sending their chips to Intel, Apple, all of these different places. Maybe that's like a layer one of a reaction of fundamental news. But his fundamental play was actually underneath that. He was looking at, okay, well, the biggest exporter of wine to China is Australia. So maybe he's going to start shorting wineries in Australia. So that's the kind of like, when you're looking at fundamental plays, he looks at different levels of fundamentals. When we talk about, okay, like job market is hot, so inflation is probably not coming down, so maybe interest rates, what is the layer one of what's going to happen is, okay, they're not going to cut rates, so it's going to be risk off until they start cutting rates. That's a layer one. Maybe underneath that, there's another play that we're not even thinking about because of that kind of stuff that is happening. So,
look at this. This is, by the way, that's very interesting, and I don't think a lot of people think about that.
Thank you very much. That sounded very sarcastic.
I didn't mean to. Like, I was just thinking about something
Very
else. I saw this
convincing.
trade,
that was very interesting. Thank you.
No, but it was like, honestly, I think a lot of people don't think about that. Like they think, in interest rates, how is that going to affect US? That's long the US dollar or not. But then, when you look at it, you look at like what countries importing what, and I know he talks a lot about metals and things like that, and how's that affecting. So yeah, it's very very interesting to have that sort of perspective when you're, like you said, you look at it in terms of levels and layers, and you kind of like, it's like an onion. You peel one layer off and you go deeper into the onion to find those juicy onion trades,
Yeah.
Inner onion.
Each layer has another uncovered P&L.
Exactly. We're actually we're over time. But look at this NCD CHF. This is a possible trade for me. Looking at the daily, this is a very nice break and retest. So this to me would be a trade if we perhaps tomorrow, if we get some nice confirmation.
Yeah, we can check upon it tomorrow to see how it went. It looks very textbook break and retest to me.
Yeah, same thing with NCD CAD. We have something here as well. That might actually be. I think I'm a bit.
So guys, I'm gonna have to do the giveaway right now because I've got another meeting that I've got to get into, and gold's dropping back down, so I want to get off before I show anybody. Oh damn! Somebody showed my screen. No, I'm joking. I'm gonna do the giveaway right now. Is there anybody doing the competition for Trade the Pool? That is interesting.
Yeah, I think we have a few people doing that.
Okay, I'm going to just. How many likes have we got?
We got 373. Not a lot today, but I think we haven't really mentioned a lot about
373. We're gonna go 4 then, just because. 1006. That's one. We're gonna give an extra one. Okay. We got Paul B, Benny M. Forgive me, Marcus, and Sazibo. But anyway,
Nice.
guys, I'm gonna leave you two here because I've got to dip off. I'm actually 4 minutes late.
All right, take care,
I'll
man.
see you guys. See you guys next week because I'm not gonna be here on Tuesday or Wednesday as well. So.
All right.
All right. I'm gonna take care, man. Take care. Take care.
Yeah, take care. Till next week. See you around.
I'm gonna open a trade here on NCD CAD. Let me bring that up. This is the trade on NCD CAD. It is moving right now. It's gonna be a very small move, but this is the trade I am looking to take. I don't even have NCD CAD yet on MetaTrader. I'm going to be adding that one. And I kind of have to enter before we end the live stream, because I feel like I need to enter right now. Okay, so we got the stop loss right here. That's the one. There's a position size of 2. Oh yeah, okay, 2. I'm in right there. So again, this is the trade. Looking at the daily, it's a break and retest of this level right here. We hit that level. Looking at the 4 hour, we have a good bullish engulfing candle here on the 4 hour, and I'm looking to take this trade up to just these highs around this area. So this is just a very small move that I'm looking for, but on the I'm basically, if you look at the 1 hour, I'm looking to take it up to this level. And because you had a massive move down here, there is of course a chance that you'll retrace this whole move before moving back down, but I'm happy to just get a very small part of that move with a very wide stop loss. Again, before looking at the statistics of my journal, I would never take a trade like this, but now I know I don't need to wait for the trade to go up here. That would be the 2 hours trade or the 2.6 hour trade. I've seen that most of my trades, actually 72% of my trades, will move up to 0.5 hour, which, looking at this, there is a high probability of seeing a move up here, as a much lower probability of seeing a move here.
If I may interject, how does this information, this knowledge that you now have, this insight based on your statistic, how does it make you feel in terms of confidence or doubts in your, let's say, this trade? Does it change anything how you feel about this trade in terms of fear, confidence, and so on?
Yeah, I'm able to not care about it.
Exactly.
I'm able. Yeah, I'm able to look at the statistics and say, yeah, it is. I'll walk away and I say, I'm walking away with focus on. My focus is 72%. I'm walking away and I keep telling myself 72%.
You're trading the statistics.
Yeah, exactly.
That's the difference, and that's a mindset shift that I think suits a lot of people when you're trading. Not this you're trading this trade, of course, but your expectation is not based on the result or the outcome of the next trade, but on the statistics. Given enough numbers, you're supposed to end up so many R's or pips above or whatever you measured before. And I think that's the power of and the advantages of having data backing you up when you're trading. It changes completely, because you cannot care about this trade. The statistics will take care of it.
Yeah, exactly. It's that's the beauty of it. And I have to be careful though. Like I have to be careful because what if this trade is not the trade that I tested, you know. So the fact that I've now tested this, I now know that 0.5R that has a 72% win rate. But what if this is not the 0.5R trade that I've tested? What if I took this trade just because I know that 0.5R trades has a 72% win rate? And that's why we need the forward test as well. We need to live test it, because
Of course,
you know, this is the real test, you know.
yeah. Actually, what you say is very important. Your entry selection should not change because of the knowledge you have.
Yeah,
So
but it does though. Like it will change whether we like it or not. We are humans, and we are being, you know, affected by things out of our control. So it will change, and that's the thing. You know, I'm not gonna have a 72% win rate doing this. I know that. You know, it's gonna be lower.
one of the things that you could ask yourself is, those other entries, was the higher TP a factor in your decision making for taking that trade? Was
Yeah,
it
yeah,
because you saw 1 to 10 and you say this is juicy, and you enter? Because if that is the case, and now you're switching to only look if there is enough for 1 or 2, then you're going to be taking different trades, different entries. And that's something you do not want, because what you're actually doing is you want to be taking the same trades that you took before, but only you let that whatever TP that you measured is better, that to be the way you take out. But you're still looking this. You should be asking yourself the same questions you were asking before, in order to decide whether you enter or not. So you got to be
well,
careful
actually,
not to change your
yeah, but you
entries.
know, I can look at this from a perspective of, you know, so one thing is the daily candle has not closed yet, but you know, I go to the 4 hour, I look at like, what's my entry trigger? Well, my entry trigger is price hits the high time frame level and it forms a 4 hour bullish engulfing candle. That is the 4 hour bullish engulfing candle. What would increase the chances of this being a good trade? Well, that's if the bullish engulfing candle prints within the reload zone, and it's perfect. It does not get better than this. It's like literally
I,
perfect. So
I have
yes,
another cue for you.
yeah,
The third candle, or the one next after the engulfing, to me it's a confirmed engulfing, because the wick comes down, touches
yeah,
the order block, what I consider an order block, and then close above as a bullish engulfing. So it rejected. It had an immediate rejection. That to me is a confirmed order block. So the market
yeah.
not only forms it, but goes down, tests it right away, and rejects it and continues up. To me that's a good indication. If I'm trading discretionary, that's a plus.
And you know, yeah, and I absolutely agree with you. I like that as well. I don't really have I can't really describe it in the same words, but what I would say is you get a like, this is a pattern I see quite often, is you have a bullish engulfing candle and then you come down and you kind of like hit the 50 point of that bullish engulfing candle, and then you bounce and that confirms it. Now, what I like about this test is the fact that I can take any trades that are between 0.5 and 1R, and depending on where the FTA is. Now, the FTA is actually up here. It's actually around 0.65, but I'm actually choosing to take 0.5 here, and it feels good that I'm able to do that without losing money.
Nice.
So yeah,
That's,
yeah, okay, guys. I think we're a bit over time here, but yeah, sometimes, you know, you get a trade, you see a trade, you execute. Victor, you're going to be on Discord today.
Yes, I am. After our show, after this stream, I will be having a workshop, and we'll go over the market and talk about market analysis and whatever issues our traders may need help with.
All right, that sounds
yes.
beautiful. So get into the Discord, guys. If you're not in the Discord, go to the hub and you'll find the link to the Discord server there. We will see you guys tomorrow, same time, same place tomorrow. I will update you on this trade. I'll update you on any other trades I've taken, and perhaps we'll talk a little bit more about you know, system testing, system development, looking at statistics and things like that. I think it's very important to do, and maybe we could give people some tips on you know, how to journal in a simple way. What should they look for, you know, in a journal?
For sure, for sure. I think those are essential habits every trader should have, among other things.
Definitely.
But for sure, journal, and not only journal, but to also analyze what you journal. Because
Yeah.
one thing is to journal. If you don't journal, there's no way to analyze it. But you have to analyze it as well. It's not only journaling; it's actually extracting the value that is within those numbers, those entries, the statistics you are recording.
Yeah, I feel like you and me, Victor, we could be talking about this for hours and hours.
Actually,
There,
yes.
there's, yeah, there's a beauty in statistics. There's like, and looking at statistics as a treasure trove of knowledge.
It is. It is. As you said earlier, we tend, or the community tends, especially if you're new, you tend to focus on other things to get your edge, but and not putting enough attention in, and getting that the value out of the statistics. But there's a lot to be gained by knowing, by collecting and analyzing your statistics. Only by your statistics already you can make a strategy that maybe break even, or even losing, make it break even, or make it profitable, just by knowing and checking the statistics. There's a lot of value that is untapped for a lot of people. If you're not doing your statistics, you don't know your statistics, you are missing out for sure. You're missing out on a lot of profits.
Well, Victor, we have to leave something for tomorrow, but I would like to thank you all for joining, and I hope to see you all tomorrow. Take care, everyone, and use a stop loss.
Bye bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.